Ni, ni. So everybody, we are back again today. And today also is a special day also like the other day. Today is going to be fire too, like so trust me, because we are bringing in the best, not among the best. So you already know my name, so I don't think you actually need my name again. So, but I would just advise all of us like we should just take our time and listen and learn from the best, because all of us here are learning today. Likewise, me, myself, I'm going to be learning myself from the best. So if I tell you someone is the best, just trust me, he is the best, one of the best. He's not like one of the best, he's the best himself. so so don't play, man. So my brother, you are welcome, and I trust you 100%. You are going to burn this place down. So you can go ahead.
Okay. All right. Good evening, guys. Good evening, everyone. And I want to welcome us to the five of this boot camp. And it has been an enriching one, and I've been learning a lot. So tonight I'll be your host. I'm Emiski, and I'll be your tutor for tonight. So tonight we'll be talking about. Sorry, excuse me. Tonight we'll be talking about risk management and trading psychology. Risk management and trading psychology. Now, first off, we'll start with what is risk management. So, risk management refers to the strategies and techniques used to minimize potential losses and protect capital while trying to maximize profits. Now, we all know that the essence of trading is to probably make profit here, to make profit out of trading. Now, the purpose of risk management is to keep us in the game till we begin to make profit. That is, in trading, it's about protecting your account from major losses so you can stay in the game long enough to see consistent profits. Now, no matter how good you are as a trader, no matter how perfect you are with your strategy, you must be able to apply good risk management to be able to make more profit from the market and to be able to preserve your capital, because trading is about uncertainty. No matter how good, no matter how perfect your setup might be, if you don't have a good risk management or a good psychology, you mess up. So that's that about risk management and trading psychology. So, on my slide here, let me read some few points here. Okay. Materials on trading psychology. There are a lot of materials that can help enhance our trading psychology. We have lots of books and from seasoned traders who have been tested and they know how to trade perfectly. So we have books like Trading the Zone by Mark Douglas. We have Trading for a Living by Elder Alexandra. We have Calming the Mind so that your body can perform by Robert M. New Feather. We have Lifestyle of the Rich and Peeped by Rob Booker and Kim Shafter. We have other lots of books. When the material is being shared, you can probably look at the TV and get one or two books that we can read from. Now, the requirement for is to becoming a successful trader, it requires your skill, requires money management, and it requires your. So can you mute your mic once you are joining so you won't distract the class? So the materials required for becoming a successful trader, we have the skill, we have the money management, and we have our psychology. Now, this skill entails 10% of our trading success. Like I said earlier on, that no matter how good, no matter how perfect you are with the skill of trading, if you don't have a good management and trading psychology, you cannot be successful as a trader. So the skill part entails 10%, the money management entails 20%, and the psychology entails 70%. So we'll be focusing more on the psychology for today's class because trading is more about understanding yourself. If you can understand yourself perfectly as a trader, you can know when and where your flaws is coming from, where your errors is coming from. You can be able to improvise and also improve on those areas, thereby profiting, maximizing your profit in trading. So also let's go down to the next slide. It says sorry. Okay, this one is talking about money management as a trader. Now, there's something I always do as a trader. I focus on the 10 trade rule. That is, I cannot lose 10 trades in a row. If I say I'm good as a trader, I cannot lose 10 trades in a row. If I should lose 10 trades in a row, it probably means there's something wrong somewhere, which I have to correct. There's something wrong somewhere, which I have to correct. So I cannot lose 10 trades in a row as a trader. Now, take for example, I have a $100 account and I'm taking $10 per trade on that account, which means I have the opportunity to probably trade 10 times before I can lose the account. If I take 3 losses and 10 wins, and I'm targeting 1:3 on all trades, I will still explain what the ratio is all about. I just want to probably be theoretical for it before I go to the practical aspect of my chart. So if I have 10 trades and I'm taking $10 per trade and I'm targeting ratio 3, that is, I use $10 to make $30. If I should lose 3 trades, lose $30 out of my $100, right? I still have $70 left. Now, that $70 that is left, if I win one of those trades, it means I'm making $30 per trade I'm winning. Now, 7 is $210. Automatically, I'm losing $30 and I'm making $210. That's that's irrespective of the 3 losses I took. I'm still in profit because I have a good risk and I was able to manage my psychology. Take for example, I took those 10 in the first trade I lose based on the fact that I know that I'm a good trader. Yes, things happens like this. I can take losses. Trading is about uncertainty. That is, we lose, we win. It's a win and lose game. But risk management keeps the game. If I lose my 10th, my first, I'm down 30%. That is, I'm down $30. I still have $70 more to go. If I should win those 7 more setups I have to take, that is $10 per trade. If I should win 7 more trades I have to take on the account, automatically I'm up $210, right? So you can see that risk management here have given me the edge to be able to maybe manage my emotions while taking those losses because I believe I'm a good trader. And with my skill, I can be able to make profit from the market. Let's also take, for example, I am taking 10 trades in a $100 account and I'm making $10 per trade. And I lose my first 5 trades, which means I'm down 50% on my account. If I have a good risk management and I have a good psychology, I understand that trading is about uncertainty. Even if I win, even if I lose 4 or 5 trades in a row, I still have the hope of making my money back. Why? Because if I'm targeting 1:3 and I'm losing $10 per trade, I lose $5, I lose 5 in a row, which means I've lost $50 for my trade. If I should win my next 5 trades, it means I will be up by $150. $150 minus $50, which means I still have probably $100. So automatically, I'm still in the game. I'm still in profit. I see how risk management here have helped me cope with my emotions and helped me make my money back. Our risk management, trading, be able to protect your psychology at all costs. You must be able to protect. Hello, please, can you?
Please, I'm sorry, my brother. Please, can you just that guy? Can you just remove him? I've already chatted him countless of time and he like
Okay, let me check if I can see the person. I think he muted already. Please, for meetings like this, whenever we join, let's try to mute our mic because if we keep distracting the meeting, we'll keep prolonging our time and we might not be able to cover everything we have to cover. So this is the end, this is the last day of the class, but we can still have the opportunity to attend other Zoom meetings. So whenever we have opportunities like this, let's endeavor to. Thank you. So let's continue. I was talking about how risk management and good trading psychology can help you probably this person is distracting me. How good risk management and having a good psychology in trading can help you maximize from the market. Now let's go to our chart. Let me show some pictorial examples of what I'm talking about here. Now this is a trade I actually wanted to take today. I actually had this analysis here and I wanted to take this trade from this entry here. Now, if I click on it, you can see that it's showing 5.6, 5.67. Let me reduce this to 5 so I can explain perfectly well what the ratio is all about, what RR is all about. Now, this 5, automatically, this is my entry here.
brother, please. We are unable to see your screen here. I've been chatting you for that.
Okay, you're not seeing my screen.
Exactly.
Oh, let me see now. Are you seeing it now? Are you
Yes, yes,
seeing it
yes,
now?
yes.
Okay. How about the previous time I was explaining the theoretical
Yeah,
aspects?
same thing happened. So that's the reason I'm chatting you, but I
Okay,
think,
okay, okay, okay. I'm sorry for that.
but you can continue, you can continue. I think we
Share
all
the
understand.
recording so others can probably read this stuff later. So let's take for example, I had this analysis on CUSDT today, and I intend taking the trade based on my entry model. Right, this is just a basic class review. I'm not really going into details about this, but I intend taking this trade. And this, if I as I click on the icon on my position 2 here, this box here is called position 2. As I click on it here, you can see this 5 here signifies that I'm risking probably 1 to gain 5. Let's say, for example, I'm putting $10 into this trade. Automatically, if this trade should go sideways, I will lose $10. But if it goes in my direction, I will make $50 from it because it's a 1:5 trade. Now, this is about RR. Now, let's talk about FOMO. FOMO in trading. FOMO is the full meaning of FOMO means fear of missing out. And these things happens probably when we might be waiting for a setup to happen and it's not coming to our entry. And most times we try to force or probably force ourselves into the market when the market is not really giving us the entry model we want, or it's not coming to our entry, or maybe it's not presenting a good opportunity for us, or maybe we are having something like a miss entry. Let's say, for example, this is my entry here, and price came towards this direction here. Oh, let me see. Excuse me. Okay. Let's say, for example, let me use a skeletal structure to explain this. From yesterday's class, we had talked about market structure. I remember these higher highs, higher lows, higher highs, higher lows, higher highs, higher lows, higher highs, right? Now let's say, for example, I intend selling in this direction here. I intend selling here, right? So I place my position to here, and I want to sell from here. My stop loss below this guy here, and probably I'm targeting 1:5. Yeah, I'm targeting 1:5 trade here. Now I intend buying from here, right? Now let's say, for example, price comes here. Do something like this and start buying to the upside. Instead of coming to my entry here, you start buying to the upside. Now, for someone that does not have a good trading psychology, the moment I see price buying, I want to start taking entries from this direction here, taking entries from this place here, right? I want to start taking entries from this place, from this point here. Now, it's very wrong for you to take an entry when price is yet to trigger or maybe come to your entry. It's very wrong for you to start maybe placing buys or placing sells. In this scenario now, it's very wrong for you to place buys when price is still here. Maybe price is here and price is going to the upside and you're trying to force a trade. It's very, very wrong. If you have a good psychology and you are good technically, you know for a fact that if you analyze something, you're supposed to wait for it to come to your direction before you take that trade. Now, anything you are doing aside that is called FOMO. Anything you are doing aside that is called FOMO. And let's say, for example, price can still do something like this. Let's say, for example, I take the trade from this position, from this entry here, and I was trying to force it buy. Now, what will happen next? Price will probably come, take me out, take me out, take me out, tap into this entry and start buying to the upside. Now, you can see that I will curtail an unnecessary loss. Why? Because I was impatient to wait for my setup to come to my direction before I buy to the upside. Can you understand what FOMO is talking about now? Now, FOMO is about trying to force a buy from this guy here instead of waiting for price to come and tag you and go in your direction. So that's FOMO. Now, what is stop loss? What is take profit? Stop loss is the place that, let's say, for example, I want to risk $5 in this trade. I want to risk $5 on this trade. My stop loss is this position here, is this point here, this point here, this low here. This is my stop loss. This low here is my stop loss. And if price should get to this direction, it will close my order automatically. If I'm making $10 on this trade, if price should come to this direction here, it will close the trade automatically. If price exceeds this place here now, comes below this place, it have hit my stop loss. So automatically, my trade will close. Now, if I'm making $10 for this trade and price comes here, hits this, my stop loss, position here, automatically my trade will close. Now, what is take profit? This is the level at which price will get to after triggering my order that it will close my position in profit. Now, this is my take profit here. This direction here. This is my take profit here. Now, what is my take profit? It is the level at which price comes, trigger my order, and move in my direction. If price should hit this button here now, if price should hit this level now, my trade closes automatically for me on my broker. Now, the trading view is just like a, what I call it, a drawing board where you use to do analysis. The major place where you take your entries is your MT5. Probably if there's a chance for an advanced class, I believe the moderators will still make an announcement on that. So if there's a chance for you to learn advanced market structure and other things about advanced trading, you probably get how to use all these stuff properly. So my take profit is the level at which price runs after triggering my limit and moving in my direction. It's the point at which I set my broker to close my trade. Now, from this pictorial example here now, this place here now is my take profit, right? This place now is my take profit, and this place is my stop loss. Now, this place here is my entry. Now, the position too can take different color depending on your preference. Now, normally, this place is supposed to be red and here is supposed to be green, but I customize mine to be like this, right? So you as well can customize yours to be in any color you want. Let's not get,
market.
most of us,
I'm fine.
you see? So you're saying something? Okay, maybe it's...
So I'm sorry for those that did not see the screen. We are so sorry. It is just, I think it's a network problem too. The fault is from mine, so I'm so sorry. So we can just continue now.
Okay, I'm very, very sorry for that. I'm very, very, very sorry for that. I did not really, when my screen was launching, I did not really explain much. I was just probably giving, will I say, a theoretical aspect of which the PDF will be shared to us, so you can still benefit from that. Now let's go to my chart. Back to this thing I was saying. Now, from here, from the explanation I've given here, we have understand what FOMO is about, what take profit is all about, what entry is all about, and what stop loss is about. Stop loss SL, take profit TP, entry. This is here. This is my stop loss, and this is my take profit. Now, let's talk about something else. Let's talk about something else in trading. Let's talk about something else in trading. I think I've covered all the direction, all the things I'm supposed to say today. I think I've covered everything, but let me just talk one or two things on technical analysis, on structure, right? Let me just talk one or two things on structure. Now, for structure, we have higher high, higher low, higher high, higher low, higher high, higher low, higher high, higher low, higher high, right? That's that about structure. Now, this is a market, right? This is a bullish market, right? So in a bullish market, we expect every lower low created in the market to take out the new higher high point, right? This is my higher low here. This is my previous higher high. Now you can see that this is my higher low here, took out my higher high, my new higher high, which is this guy here. It took it out here to form a new higher high, right? Now the higher high prints a lower higher low again, which in turn takes out the higher high. Now we can, in essence, we can say this. We can say that in a bullish market condition, there's continuous break of structure to the upside, right? There's continuous break of structure to the upside. Now, what is a break of structure? A break of structure signifies that a new high has been created. This was our previous high right here, right? If market should take it out with the body, now that's a break of structure. I'm just trying to explain this so I can probably explain something for us. Now, let's say, for example, I know automatically that the new high that is created will print a lower high here, right? The new higher high created here will print a lower high here that will not take out the previous lower high, right? And let's say, for example, I want to use a demand zone here for my entry, a demand zone here for my entry, right? I want to use a demand zone here for my entry. Now, what will I do? I'll place my buy here, right? I'll place my buy here. Sorry, this is my Monagatsu. I'll place my buy here. Where am I targeting? The previous high, right? So this will be my target. And this will be my stop loss here. So you can see that by just understanding the basic of market structure, I can be able to take trades from it and also benefit from it, right? Now, let's take, for example, most times we can be trying to force a trade. Probably if we are not getting a new high created, we can be trying to force a trade from here, here, or here. And it could lead to losses. It could lead to losses. So trading is all about discipline. Whatever thing you trade, whatever strategy you are trading, always stick to your rules. Stick to your rules. Don't deviate from your rules in trading. If you deviate from your rules in trading, you get burnt. You will lose your money. Trading is the only profession whereby you make money. Whenever you make mistakes, you lose money. And trading is the only profession that when you are doing things right, you are making money. But whenever you do things wrong, you will lose money. You use money to pay for your mistake. So that's why it requires high discipline. And how can you have that discipline? If you understand yourself properly, if you have a good risk management. Don't be too greedy in trading. Always have a target. If my target is to make $30 for today, the moment you make that $30, please leave the market. If that's your own rule, regardless of what people are saying, that okay, they stay in the market and make more money. No, as long as it's my own rule to make $30 per day, I will stick to it. Because if you get too greedy in trading, you get burnt. So you have to understand yourself, understand how the market works for you, and stick to your rule. So I want anyone that have questions concerning what I've said today. If you have questions to ask, you can unmute your mic and ask your question. Does anyone have questions to ask?
So if you guys actually understand exactly what our boss have been saying since morning, I've been telling us, please can I just see I in the comment section, just I. If you actually understand, well, I see one. Can I just see like 50 I at once?
Wait,
Well, that's
can you complete?
amazing. That's amazing. That's amazing.
And now I come up from here.
Please, Emmanuel, please can you mute your mic? Please, sir.
I know come house, he come out time. Let's say go buy
So
something.
if you understand and you feel like you wanted to ask a question, you understand, and you feel like I need to understand more better about some places, please, you can just drop the question in the comment section or unmute yourself and talk. Just unmute yourself and talk. Ask the question. I think we all understand about everything. So no question, right? So I think my brothers already do a great work today for all of us should understand at once and nobody asks a question, which is absolutely amazing today. Come on. I think there is a question down there. Please, bro.
Okay, I think someone asked a question. He said higher high and higher low. Is that all about market structure? No, there's more to market structure. It's not just about the higher highs and higher low. I was trying to explain a scenario. I was trying to probably put a scenario whereby I can be able to explain formal better. That was why I used the higher highs and the higher lows. In structure, we have lots and lots of things. We have liquidity, we have different things that makes up structure in the market. But I was actually trying to maybe explain and make you understand what I was trying to say about formal better. That's why I used the higher highs to explain it. So I don't know if I answered your question. If I did, please signify in the chat box. Okay, this current recording, it will be shared by the host. I think the hosts are making plans on that. So the recording will be shared. you said 50%, you understand 50%. Can you elaborate more? I don't really understand what you're saying. You say you understand 50% of what I explained today. If you have questions, feel free to ask. I'll answer. You can unmute your mic and ask. What's your name? Salawuddin. Let me see if I can unmute you so you can ask your question.
Okay. Good evening.
Okay, good evening.
My question is that higher high, low and higher high and lower low. Is that all about market structure?
Like I said, that's not all about market structure. Market structure entails two things: the bullish market, the bearish market, and the ranging market. So for the bullish market, it's characterized by high lows. For the bearish market, characterized by lower lows, lower highs. Now, for the ranging market, it's a sideways market. It has no specific direction. Price is just moving sideways, probably creating highs, creating lows, creating highs, taking out lows, stuff like that. It has no direction. So that's that about structure in full. Now that's that on basic structure. We also have advanced structure. We don't really go deep into that because this is just a basic. This is just a basic class. We just want you all to have this real knowledge about trading and how it works and how everything is being done in the trading game. So probably if there's there's a free class on technical analysis or maybe advanced structure or advanced class on it, the host will probably give an announcement on that, and maybe everyone can benefit from it as well. So that's I just had to make a simple illustration of structure for you today so I can be able to portray my point better, of which I believe I did.
Okay, thank you.
Okay, you're welcome. So any other question?
For now, no
So
any.
so my brother has already talked a lot, like actually explained a lot. So what this meeting was actually about was actually the basic. We are not going into it. We just want you guys should know a little thing about forex, and you can feel like once you have a little thing about it, then you feel like okay, this is all people are saying. So I believe I believe my brother has already answered your questions. I don't think there's going to be an advanced class, there's going to be mentorship class. Then we are going to update you guys. So if you guys are interested in the mentorship, then that would be like you will have to understand everything totally and everything you can stand on your own. So yeah, all together, and it's like a lock if you probably feel like you actually wanted to join. And the mentorship class, we are going to talk about it. We are going to drop the link and everything once we all conclude about everything. So I believe all of us actually gain a lot of things. As me, myself, I actually gain because he's actually boss. So I think this class is going to end in 4 minutes. If you have anything to say about this meeting or about how my brother actually explained, please, you can just unmute yourself and talk. So I think we are good. We are good to go tonight. So thank you so much, everybody. And please, thank you so much for coming, and thank my brother for hosting us tonight, because all of us actually understand. All of us, even me, myself, I actually gained something if I should repeat it myself. So thank you so much. Thank you. So probably we are going to update you guys about the mentorship advanced class. So if you guys are interested, then we are going to drop the link to the group and we see those that are interested. So thank you so much, my brother. I think I'm done for today.
All right, so thank you very much for everyone for joining. It was a great class. I enjoyed myself, and I believed you all enjoyed yourself as well. So I hope to see you all in the future. If God permits, I hope to see you all in the future. And I believe that with this class, we'll probably have the basic knowledge we'll need to probably sharpen our edges and prepare our foundation in the trading game. I love you all. I remain a Miski. One love.